They thought Palantir was overvalued at 10. They thought it was overvalued at 20. I'm not even here saying what the valuation is. I'm just saying find a company in the world that has a rule of 114, that has U.S. commercial growing at 121%, that aggregate growth in the U.S. is 77%, that has throwing off free cash flow in a way that's anomalous, and that is fully aligned with our customers.
Palantir just delivered monster earnings, numbers so strong that analysts can't even agree on how to value it. The stock's been on fire. The CEO is clapping back at critics. And now, Michael Burry, yes, the Big Short legend, has entered the chat. But here's the twist. While some say Palantir is overvalued beyond reason, others believe it's the most unstoppable AI powerhouse on Wall Street. Let's take a look at the report from CNBC.
Joe, I want to come over to you. You're a Palantir shareholder in the Joe T ETF. What do you make of the reaction in the stock after very strong earnings? I do want to point out there was also a warning on a Korean exchange about SK Hynix that seemed to spook the markets in addition to those comments from the Morgan Stanley and Goldman Sachs CEO. But what do you make of this reaction?
Valuation was the impediment. I said it yesterday. 85 times sales, 200 plus times earnings. And apparently this morning, the marketplace is paying attention to that. Now, if there's something embedded in the earnings report for you to be particularly troubled by, I mentioned yesterday that I thought the international expansion was very favorable. Well, to hear Alex Karp say that growth is being held down by a stagnant Europe, okay, that's somewhat troubling. But I think overall you have to look at this from the perspective of how do you think about positioning here? And unfortunately, in fantasy land, it's very easy to say, okay, I'm going to make money being long, or guess what? I'm going to make money being short. I think probably what's in front of you is that both sides are going to be disappointed, both the longs and the shorts. If you have the ability to be really fast in markets and go in there and, take a short position, I think the high yesterday was 207. That's the all-time high. If you think this stock could fall 150, 160, okay, great. Congratulations. You probably should be managing a hedge fund. But that's very difficult to do. If you're thinking about selling short on the premise that this stock is going to go back down to $40 or $30, the fundamentals just aren't there to suggest it. So, look, we entered this stock in January of 24 at $16. Frank, we have an 1,100% gain in it. And the reason that we entered the stock had nothing to do with me being a genius in analyzing the balance sheet and fundamentals. It had to do with momentum. And I'll be very candid about that. And the momentum has remained in place in this stock. And I don't know where we're going to exit. I never anticipated we're going to have an 1,100% gain. I don't know. Maybe the gain's going to be hopefully 400% or 500% by the time we're out of the stock. But momentum guided us in and momentum's guided us out. And I'm going to be very clear about that. And I think ultimately, when you're looking at positioning in this stock, you have to understand that this might be entering a period where it's going to disappoint everyone and move in a sideways pattern after these earnings report.
What you just heard is textbook market tension. On one side, Palantir's fundamentals are exploding. U.S. commercial growth up 121% year over year. Operating margins above 50%, massive free cash flow. Yet on the other side, analysts are screaming valuation risk, saying the stock trades at 83 times 2026 sales. Now, add Burry's billion-dollar put position into the mix, and you've got a perfect battleground: momentum traders versus value investors. Here's my take. This isn't about whether Palantir is overvalued. It's about who's right about the future of AI infrastructure. If Palantir truly becomes the backbone of enterprise AI adoption, today's valuation could look cheap in hindsight. But if growth slows even slightly, this stock could crash back to reality, fast.
Joe, I want to come over to you. You're saying if you're looking for something to nitpick, it was some of the stagnation in Europe. But if you look at the U.S. commercial business, up 121% year over year, operating margin expanding quite a bit. It was over 50% this quarter, 34% a year ago. Doesn't that really overshadow some stagnation, I guess, over in Europe? I mean, the fact that commercial customers are adopting, and we know that Palantir has been one of the better performers using their boot camps to drive adoption. I actually talked to a number of companies that use their software. They seem to not only understand ontology, but just the use of this software. And a lot of them say it helps you expand margins, which is supposed to be one of the big base cases.
Nobody's denying any of that. There's not one person there's not one person looking at Palantir saying anything about like the health of the business. Joe is exactly right. The entirety of the debate is how much growth have investors already pulled forward into the valuation that they're currently paying. This company is obviously on fire, and it's actually kind of weird to me how defensive Alex Karp seems to be, because people who are real investors in the AI space lionize him personally and worship this company's execution. Like, I don't know of anyone in the AI world that's like, Palantir, no big deal. People are losing their minds over how well this company's doing. What he's worried about is, I guess, a couple of people come on TV here and there, and they're bearish on Palantir because of the because of the stock price and the valuation. And he seems to be really fixated on that, but it doesn't make sense to me because they're killing it. Frank, all those metrics, and I have 50 more in front of me, no other company, to his point, no other company is executing at the level that they are in this space. And I guess like a more Buffett-esque response would be, we take care of the business, the share price will take care of itself, especially considering he said he has $880 million still on the buyback. Wouldn't you want the stock to come in? Unless you're issuing stock, okay. I don't even understand why you would want a higher and higher and higher valuation. You're buying stock back. Let people be bearish. Let people sell it.
This is the Cryptagon. Stay sharp, stay informed.